You think Florida insurance companies are struggling? Think again. While homeowners fight to get their claims paid, insurers have been quietly funneling millions of dollars into their own pockets, and in some cases violating state regulations to do it. A recently uncovered 2022 study obtained by the Tampa Bay Times reveals something shocking, but perhaps not entirely unexpected. While insurers claimed financial losses from hurricanes Irma and Michael, they were actually shifting billions of dollars to affiliated companies and paying out massive dividends to their shareholders. And yet, instead of cracking down on these financial maneuvers, lawmakers in Tallahassee focused on making it harder for policyholders to fight back when they're underpaid or denied. I'm Justin Warren, partner and trial attorney at Elevate Legal Services in Boca Raton, Florida. We fight for homeowners and businesses when their insurance companies refuse to pay what they're owed. Today, I want to spread the word about how Florida's insurance industry is gaming the system and what needs to be done to fix it. Between 2017 and 2019, while Florida insurers were telling policyholders they were struggling financially, they paid out $680 million in dividends to shareholders, shifted billions of dollars to affiliated entities, often violating state regulations. In the process, they weakened their own financial standing, making it harder for them to pay out legitimate claims to their policyholders. Meanwhile, homeowners faced endless delays, underpaid claims, and outright denials. And while some of these companies eventually went under, it was the Florida taxpayers, you and me, who had to step in to cover the losses through state-backed insurance programs. You might think that when this information came to light, lawmakers would step in to hold insurers accountable. Instead, they went in the opposite direction. Over the past few years, Florida passed a series of laws designed to limit lawsuits against insurance companies. What was the justification? Well, they argued litigation was driving up insurance costs. But here's the truth. This study proves that it wasn't lawsuits bankrupting insurers. It was their own financial mismanagement. By the time regulators and lawmakers started asking questions, the damage was already done. So what can be done now to protect Florida homeowners and business owners? Well, it starts with restoring consumer rights. This is what needs to happen. Number one, reinstating the ability to sue insurers for bad faith practices. Florida recently made it harder for policyholders to hold insurance companies accountable when they delay or deny claims unfairly. These restrictions need to be reversed. If an insurance company acts in bad faith, homeowners should have the right to sue for damages beyond just what's in their policy. And it makes sense. There has to be a disincentive to the insurance company. Number two, ending loopholes that shield insurers from accountability. Right now, insurers can move money to affiliated entities and claim financial hardship while still profiting at the corporate level. We need stronger laws to prevent these types of financial shell games. Number three, requiring more transparency. Insurers should be required to disclose their financial dealings with affiliates so regulators and lawmakers can track whether they're truly struggling or just shifting money around. Number four, balancing the system in favor of policyholders. Florida's recent legal reforms have been focused on limiting claims and lawsuits, which only benefits insurance companies. We need laws that protect policyholders, not just insurer profits. If you're struggling with a denied, delayed, or underpaid insurance claim, you're not alone. The system may be stacked against policyholders right now, but that doesn't mean you have to accept it. At Elevate Legal Services, we fight to make sure insurance companies pay what they owe. Call us today for a free consultation and let's hold them accountable together.